12 companies are sitting in the private market right now worth more than $2 trillion combined. You can't buy a single share of any of them. Not yet. The first of them could file in months, not years. And most investors won't understand what they're looking at when it does. So let me show you what's really happening. These aren't garage startups. They have real revenue, real customers, and in some cases, the fastest growth Wall Street has ever measured. Some you've used today without thinking about it. Some you've never heard of, and one of them sells sandwiches. Here's the part to watch. A few of these will define the next decade of public markets. The rest are along for the ride. The hard part isn't finding them. It's telling them apart. Hey, welcome to New Stock Signals. I'm Max, the digital twin of Bill Smith, founder of Renaissance Capital, which for over 30 years has analyzed more than 11,000 IPOs. Bill personally researches and writes every video script himself. I hope you enjoy. He reads every comment, so be sure to share your thoughts below. Nothing in this video constitutes personalized investment advice. Always consult your own financial advisor before making investment decisions. Here's why this matters. When these companies go public, you'll have a narrow window to evaluate them. Most people will decide with a headline and a gut feeling. That's how investors destroy capital. This video is for the serious investor, the one who wants to understand the business before the ticker. So I'm going to walk you through 3 filters from the same system our institutional clients use. My promise is simple. By the end, you'll know what each of these 12 companies actually does, and you'll have a frame for judging which ones are in their valuation. Not hype, the business underneath it. Let me zoom out first. Every generation gets one of these moments. A cluster of private companies grows up at the same time, then reaches the public market in a wave. The late 1990s gave us the internet names. The 2010s gave us the cloud and the app economy. We're standing at the front of the next one. And here's the thing most people miss when a wave like this arrives. The list isn't one kind of company. It's defense and digital design, software and crypto, health hardware, and yes, sandwiches. Different industries, different stories. One thing in common, they're all about to become available to you. So here's the guided tour. 12 companies, what each one actually does. Let's start with the giants. Anthropic, last valued at $965 billion, the maker of the AI assistant Claude, the one you might be talking to right now. The largest name on this entire list, and it isn't public yet. OpenAI, last valued at $852 billion, the maker of ChatGPT, the company putting this technology in front of 100 million people faster than anything before it. 2 companies, over $1.8 trillion in private value. Neither one is public. That alone tells you where the market thinks this is going. Now, the enterprise software names. Databricks, last valued at $134 billion. They sell software that helps big companies organize and make sense of enormous amounts of data. The unglamorous plumbing that thousands of businesses now run on. Ramp, last valued at $44 billion. Corporate expense software and charge cards. They take the busy work out of company finance. Proofpoint, taken private for $12 billion. Enterprise security software, the company that guards corporate email and data. There's talk it could return to the public market. Then the consumer and lifestyle names. Canva, last valued at $42 billion. Design software anyone can use without a design degree, from a school flyer to a full brand kit. Discord, last valued at $15 billion, the voice and chat network that started in gaming and became home to millions of communities. Oura Health, last valued at $11 billion, the smart ring that tracks your sleep, heart rate, and recovery. Hardware plus a subscription. Now, the rest of the field. Roze, reportedly targeting a $100 billion valuation. SoftBank's AI, robotics, and data centers business. Anduril Industries, last valued at $61 billion. Defense technology, drones, sensors, and autonomous systems built for the military. Kraken, last valued at $13 billion, one of the larger cryptocurrency exchanges. That's 11 names, all worth billions, all in markets people expected. But there's one more on the list, and it's not what you think. Number 12 on the list isn't an AI company. It's Jersey Mike's, the sandwich chain. Blackstone bought them at $8 billion in 2024. 18 months later, they filed confidentially for an IPO at a reported target valuation north of $12 billion. A 50% markup in 18 months on a sandwich chain. That's not a coincidence. That's the playbook. Private equity buys a brand, holds it privately, then files to bring it public at a higher valuation. We've seen this exact movie before. Krispy Kreme, donut chain. Jab Holdings bought them in 2016 for about $1.4 billion. In 2021, they went public at a near $2.9 billion price tag. Today, it's valued at about $650 million. So the question isn't whether Jersey Mike's makes good subs. They do. The question is whether the math Blackstone built is real, or whether retail investors are being asked to fund the exit. Same playbook, different wrapper. That's the tour. 12 companies, over $2 trillion. One window. Now the part that actually matters, what do you do with this? Here's the reality. A name on this list is not a reason to buy. It's a reason to start the work. At Renaissance, we filter every IPO. There are 3 that matter most when a wave like this hits. Filter 1, measurability. Sort by how well you can actually judge the business. Some of these you can evaluate today. Ramp, Oura, Proofpoint, real revenue, real customers, numbers you can check. Others are priced for a future that still has to arrive. Anthropic and OpenAI are enormous, but a lot of that value is a bet on what comes next. Different risk, different homework. Don't judge them with the same yardstick. Filter 2, structure. Know the structure you're walking into. When these IPOs hit, the big banks get the discounted shares first. Everyday investors get in after the first day pop. Then comes the 180-day lockup expiration when insiders can finally sell. That's the date that matters. The mistake is chasing the opening day excitement, buying the headline, not the business. The discipline is the opposite. Know what you'd pay before the bell rings. Then let the price come to you, or walk away. You don't have to catch every wave. You have to avoid drowning in the wrong one. Filter 3, separation. Separate the brand you love from the stock you own. You can use a company's product every day and still pass on the shares. You can never touch digital assets and still see why a company in that space matters. The product is one question, the price is another. Keep them apart. Now let me be clear about what I'm not saying. I'm not telling you these 12 are all winners. I don't have a crystal ball. Some of these valuations will not survive contact with public markets. A $965 billion private mark is a story, until quarterly earnings make it a fact. And the timing isn't guaranteed. Companies delay, markets shift. Some on this list may not go public in this window at all. I also can't tell you which ones will work. Nobody can. Anyone who says otherwise is selling certainty no one has. What I can tell you is the pattern. When a generation of private companies reaches the public stage at once, a small group creates enormous wealth. A much larger group quietly disappoints. The job isn't prediction, it's preparation. That's the difference between investing and gambling. So here's where this leaves us. 12 companies, roughly $2 trillion in value, locked in the private market. Over the next 2 years, the doors start to open. The giants and the quiet ones, the proven businesses and the rich stories. Your edge isn't getting in first. It's knowing what each one really is before the headline tells you what to think. We don't chase tickers here. We build clarity. Here's why I can say this with a straight face. Bill has been doing this for over 30 years. Renaissance has analyzed more than 11,000 IPOs. So when we tell you a wave is coming, we mean it. Two things to do before the first of these 12 hits the tape. 1. Subscribe to this channel and hit like. We break down major IPOs and emerging trends before the bell rings. 2. If you want the full 6-filter playbook in writing, the same one our institutional clients use, Bill wrote the book, The New AI Stock Edge. Link to pre-orders below. 12 doors are about to open, and the investors who study the room will beat the ones who run for the door.